Hey everyone, welcome. It is January 21st, well after the market close, and we had some interesting developments. We had inauguration yesterday. The markets were closed for MLK. We coincided with the inauguration, and today was the first real day of trading after President Trump took office again. So, what did we learn? Well, excuse me, the market was cautiously bullish, and we did move a little bit higher, and in the S&P 500 we did match these highs right here. So what remains to be seen, because we had this holiday week, it's a shortened week, we tend to be a little bit fragmented, and it's a little bit more difficult for us to really get directional in a fragmented week. So we may see this pull back a little bit, but what we really want to see is whether or not we have momentum that carries us to these all-time highs, and then whether that momentum is strong enough for us to continue. So as long as we are in this box that I've drawn several times in the past, we're not really going to get too excited. We're not really going anywhere. So ever since inauguration until now, we've been trading in this wide range box, high volatility, chop sideways, with the market not really going anywhere in the last couple of months. So before we get too excited and start getting directional on this market, we really want to see prices on the S&P 500 break out of this range, either to the upside or to the downside. Right now, we're a lot closer to the upside than we are to the downside, but from what we can gather, this week may not be the week where we actually break up. We might match all-time highs, but it's unlikely that we're going to carry enough momentum on a fragmented week for us to really move upwards, unless we start to see Trump really start to implement a lot of the policies that he talked about. So we barely got mention of tariffs. We didn't get any mention of tariffs on day one. On day two today, there was mention of him possibly implementing tariffs on Canada and China, but no definitive moves, nothing actually signed into policy. So we really need to see that real catalyst in order for us to move. So absent Trump signing anything and officially implementing any policy, we're really dependent on earnings. We do have a number of earnings starting to come out this week, even more next week. So again, the catalysts are probably all more next week than they are this week, which gives me reason to believe that we are probably going to pull back from here. We may move up higher and challenge these all-time highs, but I don't think we're going to go past the all-time highs this week. Let's take a look and see what the other indices are looking like, and then we can maybe get more conviction in that viewpoint. So let's take a look at QQQ. QQQ also up, but not nearly as much and not nearly as aggressively as the S&P 500. We are above all our major moving averages. Those moving averages, those are quite a bit closer to each other than they were in the SP 500. And you can see that today we did not quite make it to these highs right here. So as of right now, it is still a series of lower highs and a series of lower lows. So we haven't gotten out of this channel, this bearish channel, quite yet. But again, we're not considering it bearish because we have this wide range chop sideways in the market. Now what we want to see is, well, the S&P looked like it did better than the QQQ, so that probably means the industrial, the blue chip stocks, and the broad market is catching up and doing a little bit better. And so we want to see that gap closed. And when we have broad market participation, that's when the stock market can really start moving again. So let's take a look at the Dow Jones. Let's see how that's doing. Also aggressively upwards, breaking above its MA50, which is very good. So this is looking strong, but at least in the last week, it's been looking very strong. But overall, in this time period, it still hasn't quite caught up to the QQQ and to the SPY quite yet. So there is still a little bit of disparity between the Dow Jones and the QQQ. Let's take a look at the MAGS. MAGS has just been chopping sideways for the past week, so we are playing a little bit of catch up. And when they even out or get close, a little bit closer, then we will have more confidence that this market can continue to move upwards. Let's look at the equal weighted SPY. RSP looks almost exactly like the Dow Jones. So again, that is a positive sign and reason for us to be optimistic that we could move upwards. However, not quite yet. So maybe, like I was saying, maybe not this week. We don't have that real push, that real impetus, the catalyst that that are necessary for us to break above those all-time highs, unless we get some amazing earnings. So far, we had Netflix come out. Netflix do we have aftermarket? No, we'll have to look intraday. Let's take a look at Netflix. Netflix, huge move upwards. 940 was probably about the expected move, so well above the expected move over here. So Netflix has done really well. That should be a boon for the QQQ and MAG stocks. We also had STX moving nicely upwards, 107. This is within the expected move, so but still very positive. Let's look at the United Airlines. United Airlines also positive. That's great, but not outside the expected move either. But we have a tech stock, we have a consumer discretionary / tech stock, and we have a airline. So we are getting some breadth. And let's take a look at, I believe CAH also announced. Nope. COF financials. There we go. Financial down. That is a little bit unexpected. We would have expected the financials to be doing quite well in the current environment. So we'll want to see if that continues. We'll want to see Citibank, JP Morgan, Wells Fargo, Bank of America. We want to see how well all of the banks as a whole do. But if COF is an exception, then it's looking kind of positive for the overall market. So based on what we've seen right now, it looks like that we'll probably get a little bit of a boost at the open for the S&P 500. How much of a boost does that get us to the all-time highs? That I'm not so sure about. It might get us to about 606, 608. All-time high was right here, I believe, at 609. So maybe it gets us there or not quite there, and then the rest of the week we can hit that all-time high. We are just really going to pay attention to that all-time high because that's what we're looking for. Until we can get above that all-time high, I'm not going to get directional to the upside, or if we go below 575, 570, I'm not going to get directional to the downside. To me, that's all in this wide range chop that we've had ever since the election results. So the earnings look like they might get us to the upper edge of that range. And then we'll have to see, is there enough market participation this week, given that we had a holiday week, or do we have to wait until next week to see if we're really going to buck up against those all-time highs and break through them? So right now I'm cautiously optimistic. It is looking pretty good. We do have some earnings catalysts showing us that it is definitely possible, but I'm just going to reserve myself from taking any strongly directional trades in the American markets until we get that clean break above 609 level on the S&P 500. So if we can't get directional in the US markets, where can we get directional? Well, we've got TLT, or US equity markets, at least TLT. That's a nice, very strong downtrend. Yes, we broke above that EMA 20, but this is still just matching that high right there. And we'll see if that comes back down, then we'll continue with that downtrend. Now, this movement upwards has been very good and very supportive of the equity markets, of the S&P 500. So if we get a little bit of pullback right here, then it may be a little bit more difficult for the S&P 500 to continue upwards and break those all-time highs. So this is kind of a mark against, although right now, as of right now, the TLT in the last week has been a little bit strong. And if we look at DXY, the dollar, we have an associated movement downwards, but that's just to a support level right here. This trend is very much intact, so we really want to see if this dollar weakens, truly does weaken and break down, or if this is just going to bounce off of the support that we have right here. Gold, mostly sideways. Yeah, we'd make a higher high right here, which is encouraging, but this looks like a very slow movement, slow drift upwards to challenge this 255 to 260 area. And then it's kind of in doubt whether or not we could get above that. But for now, it does look like there might be a little bit more to this move, but we'll just have to see. So if we wanted to get directional, if we want to trade spreads, then the S&P 500 is great and just fine. The US equities markets are great. If we want to get directional though, maybe we'll go to bonds. That would be, or maybe some of these commodities. But another place that we can look is foreign markets. FXI, China. We know that Trump has been talking about tariffs against many other countries, probably the biggest target of which is China. It was in his previous presidency, and tariffs being this huge deal that he's been talking about for all around the world. Well, I think China is still the main focus of that because that's where we have the largest trade imbalance. So, and then is also one of the two countries that he mentioned implementing tariffs possibly quite soon. So that's not very bullish for China. They're already having their internal challenges. And then if they're having a trade issue with the US, then that is going to put pressure on their markets. Then you can see that they tried to have that boost late last year, in the last quarter of last year, and people got enthusiastic about it. But since then, it just kind of tapered off, dying a slow death. So we would just expect that to continue. If we look at a couple of Chinese names, Baidu, you can see very bullish, bearish, very bearish, nice strong downtrend, bounce back up into the EMA 20 to MA 50 range. So that looks like it's ripe for another bounce. As long as it can bounce, then another leg downwards. If we look at JD, similar story, except it is above all of its moving averages. So if we were going to pick between the two, we definitely go with JD. And then let's take a look at Baba. Alibaba looking at similar, a lot more similar to Baidu than it does to JD, although it is above its MA 200 as of today or yesterday, or Friday, I guess I should say. But it did buck up into that MA 50 and meet resistance and then start to come back down. So we'll see. Out of those three, it looks like Baidu is the weakest, but Baba is looking like it could be a pretty good candidate as well, although it does have earnings coming up pretty soon. So it looks like Baidu is probably the best candidate over there. So if we can't find direction in US markets, in US equity markets, we could always look to other asset classes, or we can look outside the US. And in this case, the American policy of the new president gives us another reason for us to believe that this downtrend will continue. So this is looking like a high conviction trade if you're looking to go directional.